Welcome back to Talk Property to Me. My name is Brad East.
And I'm Aaron Downey, and today we've got a follow-on from last week from the finance side of things. Now we're going to talk to everyone about first-time property and investors, but the actual property selection.
Yeah, so a bit of as you said, a bit of a follow-on. We've talked about how to get the finance, increase your borrowing capacities, all that sort of thing. So if you are listening to this one for the first time, jump back an episode and listen to that one. But bit of an outline of what we're going to go over today is the first thing we're going to talk about is location, arguably very important. How to conduct a bit of market research, choosing the right property type, so whether you're going to be going for an apartment or a house or whatever it's going to be, looking at the long-term outlook of that area, paying attention to scarcity and owner-occupied appeal, so we'll talk about that in a bit more detail, and how to stay updated, I guess, on market trends in that area. So we'll get straight into it. Number one, I guess, is very important, location, you know, and what I do see a lot of is the mum and dad first-time investors. They own a property, they want to invest the street back, you know, because they can see it, they can drive past it and see if the tenants mowed the lawn and all those things. But, you know, is that always a good location? You know, I would argue no. I think when you are buying your first investment property, it's always good to try and diversify that location. What are your thoughts on that, Aaron?
Yeah, it's a good one because it's the most common thing out there. It's it's publicly known, and people talk about location being the most important thing, and arguably it is. But I think there's a lot of sort of misconceptions, and like you said, a lot of people say a certain location, but what's actually fundamental to that location and what's driving it?
100%.
And do they, when people reference a location, do they actually understand that information?
Yeah, just because you've heard on a social post that a location is good, doesn't mean it is. The other thing, I guess, I think we did touch on it last week briefly, was that you might have a suburb that's identified as a good location, but within that suburb, you're going to have good streets, bad streets,
100%.
Main roads, all these things. So, as a bit of a breakdown, I guess as a guide, you're going to want to live where, you're going to want to invest where you're going to want to live.
Yeah.
Would you really want to live next to right next door to a school? Probably not for me. Just because of the parking and noise. But, 2 streets back from the school might be great.
And that's the thing, like you've got the location, and we've talked about submarkets before, and you can just say Sydney or Newcastle as a location, but then when you're going into that more specific detail with schools and that, for example, and you can buy 1 street back, that's really suburb specific information that you need to understand.
And I think the best way to get a feel of that is literally go to the location.
100%.
Don't just jump on realestate.com and go, this is a great spot according to the Google map or according to what someone else has told you on a post or whatever, or a property expert on TikTok or whatever. Just get on a plane, get in the car, go look at the area. Drive down the streets. Where would you want to live? This street looks good, or this one's great. Have a look around the area. And one thing that I think we did mention it last week was proximity to reputable schools. So you might have a location. What schools do everyone want to go to? Is it a private school? Do you have to be in a catchment for a certain public school? Have a look at those things. That's something to really research. Next one on here was public transport. Is it accessible via public transport? Is there a train station nearby? Are there other things that are going to be really attractive to tenants, especially if they're in that as fringe areas to major cities? You don't want to have to get an Uber to a train station. You might they might want something that they can just walk to a train station or to a bus stop. These sort of things are going to make a big difference, in my opinion, to the vacancy rates as well.
It's overall the actual growth for both rental return but also appreciation. But and this all sort of feeds into itself with the scarcity and the owner-occupied appeal and conducting market research and the long-term outlook as well. But in terms of the actual location, like we're saying about public transport, it's all of those things, the small considerations, schools, the infrastructure, not just public transport routes, but actual infrastructure that's going on in the area. Access to amenities we've spoken about before on the podcast with all of the coastal lifestyle locations. It's why you see a lot of, places like Newcastle and the coastal towns in these cities. You've got all the lifestyle amenities there. You've got all of the transport and infrastructure projects around you. You've got the population to support that location, but you're also living by the beach.
100%. Like, where do you want to live?
Exactly.
This next point was close to amenities, shops, restaurants, parks. I've literally just sold a house at Catherine Hill Bay, sort of border of Lake Macquarie and Central Coast, and it was nowhere near shops and parks.
Yeah.
And that was one of the big factors for us of wanting to leave.
Yeah.
It's a great area for retirees or people that have grown up in that area and don't mind driving 20 minutes to get a loaf of bread.
Yeah.
But for us, it was like, no, we've got to go back into civilization.
Yeah. I walk 2 blocks to Coles from my place, and
exactly.
It's hard to leave that.
You can't. And I've grown up closer to those amenities, so going backwards, felt a bit foreign. So it's something to consider, and that's a real life example of that did make a big factor for me.
Well, I think on those amenities, like if you actually use an example like New Lambton, New Lambton is in the mid-ring, closer to the outer suburbs of Newcastle. It's not near the beach at all, and there's a lot of other suburbs that are closer, but it's right near John Hunter Hospital. You've got a big infrastructure project that's going on now, which is the highway, which is going to bypass Lambton Road. And you've got direct access to the Newcastle Link Road there. And we're seeing house prices, upwards of 3 to 3.5 million in there sometimes. So it just goes to show that,
it's close to the amenities.
Exactly.
And, in that area, New Lambton, a lot of doctors, a lot of,
a lot of affluence in the area.
Yeah. And it's because it's, a lot of those doctors are on call for 24 hours a day.
Yeah.
They don't want to have to drive 20 minutes.
Yeah.
A lot happens in 20 minutes in the medical medical space. So,
and we touched on that in the last podcast, like people's borrowing capacity or income and debt held in their property. People earn more money, they're going to spend more money on their property.
100%. And some of those houses in that area are absolutely awesome.
Yeah, they're nice.
But, that's pretty much a wrap up on the location. So you want to find an area, probably research what area you want to go in, and then go further into it. What street, what house on that street, obviously has to be for sale. Otherwise, makes it a bit awkward.
Or knock on the door.
But, how close are you to train stations or public transport? How close are you to shops, restaurants, parks, all those things that people want to be around? The next one, I guess, is conducting the market research. So I guess we've got the 2 types, don't you? The quantitative and the qualitative. Did I say that right?
Quantitative and qualitative data.
You. Thanks for that.
So just and that again just feeds into scarcity and owner-occupied appeal. And we touched on it in the podcast before. You can sit there and you can track all of these metrics online for your growth rates and your long-term trends and your supply and demand metrics and all of these things. But like we've just touched on, you actually have to buy somewhere you want to live.
Yeah.
And if you don't want to live there, you can almost guarantee somebody else isn't going to want to live there, which is the person going to rent your place. So 100%. You can conduct market research online by looking at all of the metric that PropTrack supplies on realestate.com. Or you can go at that one step further with CoreLogic or Hashtag Analytics or Microburbs.
Price Finder, I think, is another one. They're pretty similar.
And if you want good, reliable information, you can pay for a subscription to get access to more relevant information. But we've spoken about it before. That's only one side of it. You need to be boots on the ground,
100%.
Seeing what the area is like and supporting the information that you've found.
And that's what it says, attending open homes, going to community forums. Literally, if you dug that deep, you could jump in the local mothers groups and they'll tell you which school's good
100%.
What school do you recommend in this area?
Yeah.
Set up a fake profile.
Yeah, honestly, there's a Newcastle subreddit, and if anyone's buying in an area, I suggest they get on one.
Oh, 100% though. And that's a different type of research. You know? There's not just, because these platforms, you know, your price finders, CoreLogic, it's all historical. You know, it's telling you what's happened over the last 20, 30 years, 10 years, 5 years, 1 year, whatever. It's not going to really give you a good insight of what's going to happen.
Yeah.
You know, and I think it's hard. Like, yeah, you might get an area that's experiencing really good growth, but how long is that going to go for? You know, you're better off, as you said, looking at potentials in different areas.
Yeah.
So, there's no avoiding actually going and looking at these places, in my opinion.
You can do research online for investment properties, and I know most people are. They're buying completely sight unseen, and a lot of buyers agents are for their clients as well. And you can get a lot of information online, and especially with the tools that are available to actually assess the location itself. But that's purely for investment. And you need to make sure that the information that you're getting is accurate.
Yeah, I think each to their own. But for me personally, I'd want to see what I'm buying.
Yeah,
or at least have someone.
I do.
Yeah, have someone go and look at it. Property type. So choosing the right property type. We're not going to go into commercial, but the two types, I guess, is residential and commercial. Commercial, it's a whole different beast. It's
commercial's great. There's a lot of money to be made, both appreciation and fantastic yields on them, especially with interest rates the way they are at the moment. But for first-time investors, I wouldn't suggest it. As you know, Brad, from a finance perspective, bigger deposits.
Usually 30% deposit.
Yeah.
They're going to want to see an active lease, or otherwise you got to service the whole loan without any rental income. Generally speaking, a place that's got an active lease is going to be worth more too, so the price goes up.
Yeah.
Yeah, so it's not a bad idea. I see a lot of it, especially the commercial properties where mum and dad or whoever it is are self-employed, and they will buy a commercial property under their self-managed super fund.
Lease it from themselves.
Lease it to themselves.
Yeah.
Because the money's just circulating from themselves or from their business into their super fund.
Yeah.
Not a bad idea.
Yeah.
But I reckon that's a different conversation for another day.
If you're a first-time investor,
keep it simple.
With your own money and not a super fund, start with resi.
So then you break it down into residential. You do have obviously a few different types. You've got, I guess the easier way to think of it is strata and non-strata, Torrens and strata.
Yeah.
So your, I guess, general standalone homes are all going to be Torrens titles, so you're not going to pay strata fees. Townhouses, apartments are all going to have strata fees. These strata fees actually do impact your borrowing capacity too.
Yeah, of course.
Because they get added to, we talked about it last week, the HEM, household expenditure measure. Yeah. It gets added in addition to that.
Yeah, of course.
So the buying a townhouse or something with strata will actually lower your borrowing capacity again. But I don't think there's anything bad about either, personally.
No, and I think this is where it comes to like our next topic, which is a long-term outlook. It's not just long-term outlook in terms of what's the property going to achieve growth-wise and what's the economic conditions going to be like at that time. It's more so you've got to consider the right property for you at that time and in the future.
Yeah. Your strata properties are going to have less ongoing fee or less ongoing maintenance, but that strata fee is going to be higher.
Yeah.
Sort of does even itself out a little bit, but, there's no wrong answer as far as the property type, in my opinion, as long as it meets some of these other things that we've talked about, the location.
If it's a set and forget investment, and that's the thing, different investment strategies, different property type. Like if you want to set and forget an investment, you're not going to buy a rundown 3-bedroom house that you're going to want to do a subdivision on or add a granny flat or do renovations to increase
that's very hands-on.
Your cash and cash return. Like if you want to set and forget, you'll probably buy something that's already renovated, house, unit or townhouse,
I guess some properties I would avoid would be, anything less than probably 40 square. That's most banks won't lend to that.
Yeah.
I'm
about to buy a 1-bedroom unit, which is 86 squares.
Yeah,
So-
well, yeah, that gives you an idea how small 40 square is. It's not big.
Yeah.
It's not big at all. And studios are hard as
Yeah.
well. So at least I reckon 1-bedroom minimum.
Yeah.
And anything up 40 and above internal space is usually a lot more preferable from a lending perspective.
And with the right property type too, like you might look at a property type and go, yeah, this is going to be great from a returns perspective when I sell it in 10 years. But you've also got to lease it as well. So,
That's right.
In terms of property type, you want to maintain the lowest type of vacancies that you can possibly have. And you want ideally a tenant that's going to stay there long term, but also look after the place.
Yep.
So I think the property type, you've got to consider not only what your returns are going to be, but who's going to be living in the place.
The good points there. I think there's no wrong answer. As I said, just do your research and make sure you're getting something that's suitable for you and that you think would appeal to an owner occupier.
Yeah.
Not just a off the plan, investment stock. What some people will try and sell it as. I've heard that term so many times. Oh, it's just an investment. Don't worry about it.
Yeah.
Nah, you got to worry.
Well, there are a lot of people out there that
live by that.
they purely don't care. They buy it sight unseen, the numbers stack up, execute the transaction.
Yeah. Nah, not for me. The next one is a good one. It's consider the long-term outlook. So you're really starting to research what is the long-term plan in that area. And some developments, future developments, take place because those bigger companies have done that research themselves. I can tell you that Westfield will not build a shopping centre in a place that they don't think is going to grow. Woolworths are the same.
Bunnings,
Woolworths,
KFC, Macca's.
all of them.
Yeah.
If they're building something in an area, they've done that research, and it's research that we can't afford to do. They're next level with their stuff.
Yeah.
So that's always something to consider, and then other things that are going to generate employment. So your hospitals and manufacturing, all those sort of things.
I think we can start to highlight now how this is all feeding into itself.
Yeah.
The location is the long-term outlook. The economic trends in the area, the development in the area, which ultimately is driving. Of course, development is infrastructure, but that's driving population growth. It's driving household incomes in the area. It's driving economic activity for that area, which ultimately pushes up house prices. So, going back to the market research and location piece, the long-term outlook it's a very similar thing. It's just feeding into itself.
100%. And what economic trends sort of, I wouldn't personally read into that too much, especially in the current economy. No one knows what's going to happen.
Yeah, I think economic trends from I'll use Mount Gambier as an example because there's a lot of investors who have entered that market and think that it's going to be a great opportunity. Mount Gambier is still a great opportunity because it's affordable. It's at that lower price point. And the supply is extremely low compared to the demand, and that's purely because of an infrastructure project that's come up in that area. But from a historical perspective, Mount Gambier did nothing for 20 years because it was just its own market trading amongst itself, and it had nothing there to stimulate the economy, increase the population, and increase household incomes.
Yeah.
But now that's happened, it will slowly continue to grow because of that economic activity. So I think that's a trend that you could reference and be like,
locally, yeah,
in a local market that isn't dictated by, somewhere good proximity to a city that's going to have that sort of ripple effect or influx of people from another area.
I wouldn't stress too much about interest rates though as a indicator of economic growth or anything like that. It's going to do what it's going to do. I think, especially this week, it might make sense if you're listening to this in a few weeks, but RBA announced this week that they're putting it on hold again. That was the August meeting.
Yeah.
And they've also said that they don't anticipate, they like their non-committal words, another rate rise in the next 6 months.
Yeah.
You know, a month ago they were like, they had the ruler out ready to smack everyone and wow, we're going to put it up, and you know, a lot changes.
Yeah, exactly. Like we've seen what interest rates have done. You know, they've been at 17%, they've been at 2%, they've been at 6 or 4.
Yeah, the average is around that 5% mark, which is where we're going to end up.
It's debt that you've got to repay, but at the end of the day, like other economic factors are just as important. Like unemployment, for example, most recently has been historically low at like 3% unemployment rates, which is more money in the market, which is more people borrowing debt. So, yeah, you know, you can look at all of these factors, and unless you're well versed in all of them, well, you're probably not going to be able to interpret a lot of it as well.
Yeah. So next one is scarcity and owner-occupied appeal. So did you want to just explain what that is?
Yeah, the owner-occupied appeal component is purely what we touched on there before with buying a property that you want to live in.
Yeah.
So think about it from a perspective of somebody wanting to live in a property. If it's an investment, say, and like I said, a lot of people just look at the numbers, and if it makes a decision, they make a purchase. But ultimately, you're decreasing your rental return by doing that. If you can find a property that appeals to a broader audience, you're going to get more demand for that particular property. And that demand is purely irrelevant data for that area. If you can increase the demand for that particular property in that suburb, that means that you're going to have more competition, increase both your rental return, but also your resale value for that place.
Some of the things that, you know, I'm literally have just gone through purchasing process myself, and some of the things that you consider is, you know, size of the rooms, you know, where's the sun in the afternoon, like all these things that you think of.
Yeah. And that's the thing. Where's the sun rise? Where's the sun set?
Is your master bedroom getting belted by the westerly sun in the afternoons? All that stuff.
Is the master bedroom separate to the kids' rooms, or is it, you know, adjacent to a main road that you're going to get noise from?
Shitty extensions that people do.
Does it have, you know, high ceilings in there? Yep. What's the natural sun like? What's the ventilation like?
Kitchen. What's the kitchen like?
Yeah. Floor plan. You know, that's where a lot of people, you know, doing small cosmetic renovations, or maybe structural in this respect. But if you're buying a place that the kitchen, living and dining is all in their own individual boxes, if you can demolish those walls and
open it up
and open that floor plan to a really functional floor plan that people want to be in, that's owner-occupied appeal. People want to live in that space, and you'll have more people competing for that product, which then directly relates into scarcity. So there's typically two types of scarcity that I say. There's natural scarcity, which is just geographical. So you've got Sydney or the cities, for an example. There's no more land in Sydney CBD and those surrounding suburbs. So the only way that you can actually increase the supply there is increase zoning laws, knock down a house, increase the size of the unit complex. So it's scarce by nature because there's limited supply of land. And then you've got property-specific scarcity, which is, say, for example, there's a Bondi. Bondi used to be, you know, residential houses. The density in that area increased, so they started knocking down houses and building unit complexes, townhouses. That decreased the supply of a property type. So now you've got less land, you've got less houses in that market, which is just feeding into that increased demand for that market.
So if you owned a house in that area, it's going to be worth a lot.
Yeah, because you don't just have investors trying to buy it, then you've got developers trying to buy it, people wanting to live in it, people wanting to invest in it, maybe flip it. You're opening it up to a massive audience.
Yeah, and you think about it on a local level, like your waterfronts or the ones with views, all those things, there's not many of them.
Yeah. Like you look at Newcastle as well, like waterfront properties will trade, you know, 10 to 14 million.
Yeah.
We've had some transactions at that level for waterfront properties. If you go one street back, they're trading at 5 to 6 million.
Exactly. Because the people with the money want it.
It's scarce. You can't replicate it.
We were hearing something years ago that I liked. Not everyone's as poor as you. Well, I'm pretty poor, so. But the people with the money want to spend it, and they want that specific thing.
Yeah, 100%.
I want a house in Bondi, or I want that $10 million waterfront.
Exactly.
And that's what they'll get. And because there's not many of them, the price goes up.
Yeah.
So the last one was, I guess, staying updated. We won't go into that too much detail, but if you're listening to this now, you're staying updated.
Exactly.
Get in the Facebook groups, get into all these different things, but educate yourself. If you're a first-time investor, do your research, get educated, and go and do it yourself if that's what you want to do. If you don't want to do it yourself, obviously there's lots of buyers agents out there like Aaron, or just reach out directly to Aaron. He'd prefer that more, and get the ball rolling. It's the cost usually to get a professional on your side is paid off in the first year or so.
Yeah,
because this is what all of these sectors. Yes, you can go. Not to put anyone off, but you can go and research all these things, and you'll get away with it. Yeah. But to get that optimal level, you do need someone that does it as a profession.
I've seen markets in Sydney, like there's markets in Manly, like that have had consistent 16% annual growth rates. Yeah. And then there's other properties in Manly that have had 6 to 7% annual growth rates.
Yeah. And that's, not bad, but the difference is substantial over a 30-year period.
100%.
So as always, jump on all the socials, but we do actually have a website now. So jump on there. If you do want to reach out directly, you can jump on the website and I think flick us an email or a message directly from that website and find all our other episodes. And we'll catch everyone on the next episode. Thank you.
Thank you.